If you want to invest in AI, your options are fairly limited as an everyday retail investor. This is especially true if you're not a high net worth individual with access to venture capital and private equity. But I said limited, not impossible. So here's how you can gain exposure to artificial intelligence as soon as today. The easiest way to invest in AI is to leverage thematic ETFs and mutual funds. Specifically, the ones that have a diversified set of holdings ranging the entire stack of AI. That's supportive hardware, software development and integration, and the end user. A thematic fund is exactly what it sounds like. It invests in companies in line with a theme or emerging trend, rather than a traditional investing strategy like growth versus value. This gives investors an alternative way of constructing a portfolio with deeper concentration. An example is Invesco's IGPT, their AI and next-gen software ETF. Based on a tracked index, IGPT holds companies like Nvidia, Google, Adobe, and Micron Technology. All companies that work with or directly on AI in different ways. Again, the full stack of AI. One thing to note is how the current landscape of AI in publicly traded companies is concentrated in large caps. The bigger businesses that have the money and infrastructure to quickly ramp up new technologies. The smaller AI companies, the promising startups, those aren't really available to us. So going back to IGPT, you can see the concentration in large caps. Over 75% of the fund is allocated to bigger companies, about 20% to medium caps, and that little residual is small cap. Another example ETF is iShares IRBO, a similar investing objective to IGPT, but with a noticeable difference in both holdings and weight percentages. For instance, Nvidia is still there, but not as heavy. Also note, Spotify, Kawasaki, and even a fintech company are in the top 10. Those aren't the first stocks that come to mind when I'm looking for AI companies, but it looks like I'm not alone, and they'll be changing the underlying index to better align with an AI focal point. My guess is they haven't captured enough of where the value is being added with such a widespread portfolio. One thing I failed to mention is there's also exposure to non-US equities in these funds. The advent of artificial intelligence will be spread across the world, and it's hard to pinpoint which of the global companies will lead the charge over a long period of time. Therefore, diversification here can go beyond the US. So those were just two examples of thousands of ETFs and mutual funds out there, all with different ways of investing in AI, tracking different indices with different weightings of different companies. With that said, when looking for the right thematic fund for you, be sure to fully understand what the fund's objective is and how they plan to achieve it. Picking a fund with an AI label is only the start of the work. I do want to propose, very quickly, that if you want to invest in AI using an ETF, you may not need to do anything special at all. You might already be exposed without even knowing it. If you're invested in an S&P 500 fund, the full stack of AI technology is all over the place. Let's just take the top 10. Microsoft, a company that directly invested in OpenAI, the creators of the most popular LLM, ChatGPT. If OpenAI does good, which I guarantee they will, so will Microsoft. Apple, they recently showcased their localized LLMs for new Apple products and iOS. Nvidia, the biggest winner on the hardware side thus far. Amazon, a direct beneficiary from AI data storage and cloud-based functionality. Meta, they're working on their own AI assistant integrated in Facebook, Instagram, and other platforms. And of course, Google. I'm sure you've seen them testing Gemini with search recently. That's just the top 10 of the S&P. The thing is, if artificial intelligence is going to be as disruptive and evolutionary as they say it will be, all of these major companies have the resources and the incentives to leverage that technology. And if they don't, they'll be replaced with companies that do. Owning the S&P is owning a bit of AI. Let's recap. Publicly available funds are not only extremely accessible by design, but due to competition, you can find lower cost options. Liquidity is rarely a problem, transparency is a must, and their holdings are typically well-known companies. Really, the advantages of using ETFs and mutual funds for exposure to AI are the very same advantages of using them for exposure to anything else. And if finding the right AI fund for you is a bit more work than you want to do, you'll be just fine if you already own the S&P. Now, the beauty of being a stock investor is that if you wanted to, you could very easily skew your portfolio towards AI with individual stock positions. There is nothing stopping you from betting big on the few companies you think will gain the majority of the value. We're seeing that with Nvidia right now. And if OpenAI were to go public, I believe we'd see the same overwhelming enthusiasm. Okay, the individual plan. Instead of diversifying across a bunch of different companies, which many will probably fail in their AI endeavors, you heavily invest in one or two. And hopefully, you're right, the stock pops off and you make 10,000% on your investment. But with reward comes risk. So never overlook how difficult it is to pick individual stocks at the optimal time over the right duration, all while consistently keeping up with the company's performance, the competition, market dynamics, and the emotional volatility. The truth is, investing in AI isn't as simple as putting all of your money on something like Nvidia. It may seem unlikely that they'd ever fail to produce a return given their position supporting this new technology, but go read about Cisco and their position leading the internet boom. It's a great cautionary tale, and it puts individual stock picking into perspective. Just be careful. Artificial intelligence has quickly become this year's crypto, in that it's dominating the conversation amongst investors and financial news coverage. That's because AI is the latest technology that poses the question, will the way we interact with the digital world completely evolve? Whether that evolution is big or small, whether it completely transforms the job market, or just provides methods of completing objectives, you may want exposure to AI to capture some of that value add. And for those of you worried about AI's takeover, this is a way to hedge against that. With the accessibility and diversification of ETFs and mutual funds, there's a simpler way to invest in AI. Let's leave it there, y'all. If you took something away from this video, consider liking and subscribing for more. If you have any questions, you can leave those in the comments below, or feel free to reach me at askalexherrera@gmail.com. As always, thanks for watching. Until next time, take care of yourself, and best of luck.